Joining us now is Philip Mackellar, an analyst at Contra, the Herd Investment Letter. Good to see you, Philip.
Good to see you too. Thanks for having me.
So most people know Benj Gallagher, and you're a little bit more behind the scenes, but you've been there quite a while. So how did you wind up with Benj and Ben at Contra, the Herd, and what's your role?
So I actually wound up with them because I watched them on TV when I was graduating university. I was going in to be a financial advisor at the time, and I was interested in the industry. And it was either watching you or Howard Green or somebody interviewing Benj, and I really liked him, really liked his philosophy, started reading his books, and I just emailed him out of the blue, as you do, I guess. And since then, we slowly built a relationship, and that relationship eventually resulted in a job which I've been doing now full-time since 2014. And I now work as an analyst for them, and I help Ben Stadelman manage the vice president's portfolio.
Oh, that's great.
Yeah.
And so you watched all those guests on BNN, on the market call shows, and somehow you narrowed it down. What was it about Benj that stood out for you?
Well, at the time I was reading a lot about Warren Buffett, and I was reading a lot about other contrarian investors, and this guy was Canadian. This guy had his own book which I could go and read, and he just seemed very coherent and made a lot of sense on market calls. So I really liked that, and that was what gravitated me towards him. So.
All right, so I'm sure you've learned a lot from him. Do you share the same philosophy? Do your philosophies differ a little bit?
They differ in some ways, but the core of what we do is very similar. He likes things, say, that have been listed for 10 years, and he doesn't look at anything less than that. I don't mind looking at things that are less than 10 years old, although I see very much where he's coming from and why he has that mindset, so I temper it somewhat, and I don't consider things younger than 5 years. So slight variations, but overall, the philosophy is quite similar.
I remember his criteria. He would drill it into my head. So it got to be around for 10 years. So there's historical data.
Yes.
The stock has to fall by about 2/3 from the previous high, and that kind of thing.
That's right.
Right.
Yeah. So very similar. He also likes good balance sheets, so I focus on that too. Something that we've maybe refined since I came on board is looking more at dilution and the impact of dilution on shareholders, and how that can have a detrimental effect, because you're just going to end up owning less of their earnings over time if they keep diluting. So there's always little changes that happen along the way, and that's been one of them.
Mm-hmm. Okay, so we're at VRIC, we're at a mining conference. So let's give our viewers some of the names that you like. Alacer is one, or Alacer is one that Benj also talked about when we talked to him yesterday. Alacer Gold.
Right, and Alacer is a company that we've owned first since 2014. We purchased it around $2 a share, and we sold between a half and a third actually a few months ago in 2019. And after going nowhere for a number of years, it took off because they had a very big deposit and a very good processing plant, which they shifted from an oxide-only plant to a sulfide oxide plant, and that has increased their mine life, it's reduced their costs, and their mine life is now one of the longest in the industry, so they have a very long runway ahead of them. But it rallied so much, we thought we'll take some off the table, we'll still have some to play with, and obviously we hope it goes higher from here, so we'll see where it goes.
All right.
Yeah.
We talked to Rick Rule of Sprott earlier today, and he's always interesting to talk to, and always has some thoughtful ideas about precious metals. So you like Sprott Inc.?
I do, yeah. So Sprott isn't a miner, obviously they're an asset manager, and what attracted me to Sprott, this is actually a good example of differing slightly from Benj, because 10 years, it wasn't listed for 10 years when Ben and I bought it, but we bought it because metals were out of favor, mining was out of favor, they were going to be a pure play in the kind of asset management for mining space, and they have a very experienced management team. It's much more diversified than owning just one mining company, so you have an experienced management team with a diversified portfolio, and then the real kicker for us was they pay a dividend, which at the time we bought was over 4%. And to be paid 4% a year, to get access to a diversified portfolio of mining companies and other ETF products, and an experienced mining team really appealed to us. So we still own that. I think we paid $2.35 or $2.36 a share, and I think today or yesterday it was trading just over $3. So it hasn't had a huge amount of appreciation like a Lacer, although we're hopeful that if the bull market continues in mining that it will get there. So we'll just see how it goes.
All right, very good. There's another idea, Sprott Inc., and the other one you have for us is a Gold Resource Corp.
Right, and Gold Resource Corp is based in Nevada. They have operations in Nevada and operations in Mexico. Their operations in Mexico are mainly silver with a few other base metals and gold in there as well. In 2019, they completed a project in Nevada called Isabella Pearl, and that project will effectively double gold production and make them more of a silver gold company instead of just a silver company. And in addition to that, what really appealed to me when I was looking at them is they don't seem quite to have the same chops on the operating side as, say, a Lacer does, but they funded this project through cash flow. They haven't done a lot of dilution compared to other miners. I mean, there is some, but there's not a lot. And today they're in a net cash position, which is great. I mean, so to have that combination of attributes and a new deposit online is positive and encouraging for us. The detriments that I would point out, though, is unlike a Lacer, which has a mine life of over 20 years, which is fantastic, Gold Resource Corp only has a mine life of about 5, so it's at the other end of the spectrum. It's also had a few historic issues with contractors, and I imagine if you were to interview the CEO, he would say the contractors' issues have been put to bed. I'm a little more skeptical, so that could be an issue going forward.
And what price did you buy that at?
Oh, we bought that at I think $3.85 or $3.86, and today it's trading at over $5. So it's had a bit of appreciation, and we bought that in December 2018. And since then, it's actually doubled its dividend. So it's not a very big dividend. It's nothing to write home about, but it is nice to get paid a little bit of a yield as we wait for it to hopefully do what a Lacer's done. But we'll see. I think the detriment there will be the mine life. So we'll see how that goes.
So your idea is Lacer Gold, Sprott Inc., and Gold Resource Corp. Thanks, Philip.
Thank you very much for having me.
Appreciate it. Philip Mackellar, analyst at Contra the Herd.